Hi there, welcome to Kneppy Invest and welcome to another answer and reply video. I have been out of the house for most of today. In fact, I've been looking at other houses, funnily enough, and I think that probably means that this answer and reply video will be a little bit shorter than the usual fare. So let's get stuck into it and not waste any more time. First comment comes from JAQZH5300, who states Sigma Healthcare target price will be $42. Now, this is a possibility. There is a possibility it will be $42. And I think the question should be to you, Jacques ZH, is what type of conviction do you have in this call? Do you have really high conviction that Sigma Healthcare will get up to $42? Or you're just spouting it because if it does happen, it makes you look good? So that's probably the big question is, what is your confidence level on this particular target price? Because if Sigma Healthcare ever gets to $42, that would be an absolutely great call. I'm a little bit dubious in the short to medium term, maybe in the long term, Sigma Healthcare, which probably will be changed its name to Chemist Warehouse. I think there's a chance eventually it will get there. I'm not sure when eventually is, however. Anyway, so hopefully you are right, eventually. Now on to a comment from Damian. Second really negative comment from Damian. Justifying why you sell via video LOL, no one cares. Now, I'll be honest with you, give this a down thumbs. If one person, just one person, takes one small thing away from any of my videos, that justifies me recording and releasing that video. All it takes is one person to learn something, take something away from any of my videos, and that means it was worth it. Anyway, so what I'm going to do, because your two comments, the only two comments you've released on this channel have been really negative, I can ban you. I hide user from a channel, and that is what I'm going to do, because you absolutely add nothing to this video channel. So you are being hidden forever. Anyway, you can come back and change your name, but it'll be pretty obvious. Anyway, on to, did I get rid of another comment there? Seems like I got rid of another comment. I'm not sure how to get back. Anyway, because I'm pretty sure there were a few other comments other than that one. There it is. Yeah, I knew there was a few other comments. Yeah, Fantastico. For some reason, it just went missing, and I knew. Anyway, so Fantastico went through all the trades for Prophecy. Prophecy share price fell a fair bit yesterday, and it looks like, according to Fantastico, there was a pretty big cross trade. We can go through the course of sales, and there it is, 3 million shares traded via Chi-X, and that 3 million shares is valued at about 1.35 million. That's probably why the volume was quite high yesterday. So volume was 3.189 million. If you have a look at the trade history, yeah, that is unusually high volume. So on occasion, you will see spikes in volume of companies, and usually it's just one trade. Could be a cross trade, something like that. Could be one fund manager selling to another fund manager, something like that. I'm not convinced that we have to neglect or ignore those big trade days. In the worst thing in TradingView, you don't see the spike because it's through Chi-X, and TradingView doesn't, well, it ignores Chi-X trades. And that's why in TradingView, it says there's only been 144,000 shares traded. So that's probably the biggest problem when it comes to TradingView. It ignores Chi-X. ComSec does not. So if you have a look at ComSec chart, did I include volume in ComSec yet? Well, funny enough, ComSec volume doesn't include Chi-X as well. And we know just by the course of sales, there was that big 3 million shares traded. So that's interesting. I didn't know that. I thought ComSec included the volume. Looks like it doesn't. Anyway, so we haven't seen a spike in volume because that particular trade was through CXA, which is Tri-X. Okay, let's move on. Thank you for that information, Fantastico. Let's move on to Ryan Corral. Hi, Kneppy. Can we have your X? You mean ex-partner? X as in Twitter? I don't know what that means. Can we have your Twitter or X? What do you mean? Can we have your X? I don't know. I have no idea what you mean. Rick Thellion, ARGT, NYSE Michael, ARGT, Global X. Oh, that's the Argentina one. Oh, yeah, of course. I completely forgot about that. Yeah, so the chart still looks pretty good. Looks pretty good. Argentinian ETF. Is there ETFs for every single company on the planet? Is there a Djiboutian ETF? If there is a Djiboutian ETF, I will be first in line to buy some shares in that particular instrument. I'm choking, by the way. Okay. Oh, here's one. I actually did answer this one from AU5657. What misses you saw on GQG result? It beats all consensus estimates. Pee-wee mentioned the Dani trouble still there. It did slightly miss on revenue. That was according to UBS. I did know that. And closing funds under management, slight misses, but beats everywhere else. And then I went to prove that. So I found some articles saying that, yeah, GQG did miss some of the results. And here's one from a quote from, who was it again? Our business today, while overall revenue slightly missed projections due to lower performance fees, management fees surpassed expectations. This was despite a 0.5% shortfall in average funds under management. So I didn't just spout nonsense. I actually did have the information there. And there's a possibility that information could have been wrong, but I did find that information from a few sources, which is a journalist thing to do. Find a couple of sources, not just one, because that source, if it's only one, would be completely wrong. So it was from a few sources that I got that information. Yeah. Anyway, sometimes I don't get two sources. Sometimes I just get one source. Yes, I know. It's pretty bad. Okay, let's move on. Chat first was the first to comment. You're welcome. And what I'm going to do now is I'm going to response status. Haven't responded. There we go. And that's right, I haven't responded to those. And we can go down to, I've already responded, I've already answered these, haven't I? Yeah. Anyway, could you have a look at Develop Global DVP? I was thinking of doing a standalone video on this company. I suppose I can give a quick look at Develop Global because the chart does look interesting. Now, I am a little bit biased when it comes to this company because I did take a trade a few months ago. It was one of those rare trades I take when the share price, I think, has hit support. Share price is not going, or is not in an uptrend, is at a support level. And I said to myself, I'll buy some shares when it gets to below $2. It fell below $2 on, I think it was in December, no, late November. So I bought some shares at $1.97, and my target, not target price, but my end strategy when it came to Develop Global, when I bought, was to sell when there was a pretty good bounce. And there was a pretty good bounce within the next month. Share price actually went from $1.97 up to $2.50, but I did not sell. And the reason I did not sell is because I actually read a little bit more about the company. And sometimes that might be a bad thing if you're just trading a position. And what I read intrigued me enough to not sell that position. And I'm very thankful that I did not do that, did not sell and take profits, because the share price has really taken off over the past few weeks. So in fact, the chart is starting to look quite bullish as well. So a pretty nice looking chart for Develop Global. And to be honest with you, now I'm going to maintain a position in Develop Global simply because the chart is starting to look really good. So I actually do like the story, but this company is not a real story. Well, it's a real company, but it's not a story because a story has no substance. It's just, it's just pages if you're reading a book. Anyway, this is a real company. I'm pretty sure they're profitable and they're growing. They have been called at times a mini min res. I'm not sure that's exactly fair, but there are some similarities between the two companies. So there's a few things to like about this company. And one of the things to like about this company now is the chart. Pretty good looking chart. The other thing to note is just look at the volume increasing over the past month since the end of January. So that's pretty good increase in volume. So the market likes this company right now, and the chart has definitely turned positive within the last week. In fact, in the past week, Developed Global share price is up 17.1%. Okay, so maybe that's all I have to do when it comes to Developed Global, and I don't have to do a standalone video. Fantastico. Any squabble with China will bring back the 200% tariff on Oz wine again. What P ratio is Treasury wines trading at? Yeah, it's who knows what's going to happen with tariffs. Who knows? We were getting away from tariffs, and then all of a sudden tariffs are back. And we know from history that tariffs are a bad thing. We know this. We know that Smoot-Hawley, that Tariff Act in 1930, it didn't cause the Great Depression, but it really made it worse, significantly made it worse. I think that's pretty standard thinking among economists, that tariffs are a bad thing. So either Trump knows that and he's just using it as a weapon, or he doesn't know it, and this could be even more concerning. Anyway, what P ratio is Treasury wines trading at? Last time I looked, and this was a while ago, it was trading at a pretty high P ratio. What we can do here is go to FinChat. Go to FinChat. Now, P ratios are not always the absolute. And probably a good example of this is Temple Webster, which I might get to in a second. I'm pretty sure there is a question about Temple Webster later in the video. So what we might do is just have a very quick look at Treasury wines and just have a look at the P ratio according to FinChat. It says it's 59.7. The P ratio the next 12 months is 16.8. So what some analysis are expecting is a significant drop in income in the next year. So 16.8 sounds fair. 59.7 sounds really stretched. And if we have a look at, so they're expecting forward growth, okay forward growth. Earnings per share growth, 14.2%. So maybe there's some one-offs that have forced the profit down for this company. And we could always check this. Just go to the financials and just go to income. And if we see income down a fair bit, the last 2.5 years, income is significantly down. So I'm wondering if there's a few one-offs that has forced it down. And probably a best gauge of profitability of this company could be another metric like EBIT or maybe underlying earnings, which I haven't looked into that deeply. But if you go back to, say, 2020, 2021, this company, well, these are yearly profits, by the way, not half-yearly profits. But if you do go back to a few years and just assume this company had a profit of about $250 to maybe $300 million with a bit of growth, then is this company looking expensive? So let's just assume it's 250, a round number, and the market cap of this company is 8.79 million. So 250 times that by 4, still looking at 32 as a PE. That's a fairly high PE. So even if profit can get back up to those levels they saw a few years ago, PE is still quite stretched. Anyway, I don't have much interest in Treasury wines, and one of the reasons why is because of the chart. I don't think this company could be considered a high quality. Yeah, I don't think it would be a high quality company, and the chart does not look good. Why? Alan's Memories of Nothing and 8029 says, why did Suncorp go down? Why did Suncorp go down? Now, when you don't know the answer to a question, first thing I would always do is go to the announcements. Did the company release any announcements? Now, when you say, why did Suncorp go down, do you mean on the 13th when they released the results? Pretty sure they released results on the 13th. Well, according to Comsec, they haven't released any results lately. That is wrong. We know that is wrong because Suncorp definitely released results lately within the last few days. And there we go. They did release results according to Market Index on the 12th. And yeah, the 12th. And the share price, what happened to the share price on the 12th? Let's have a look. It actually went up, and then the next day it went down. So maybe there was a delayed reaction from the market. That's a possibility. Or maybe it's just noise. Could be just noise. Could be just a little bit of selling pressure from maybe some fund managers. So at this point in time, there's no real indication why the share price went down on that particular day. They didn't release any news on that particular day. So when that happens, there's no news flow. I just attribute any increase or decrease in share price simply as noise, simply as short-term sentiment. And sentiment can be different time lengths. So you have very short-term sentiment, maybe minutes, hours. Then you have a little bit less short-term sentiment that could be days. And then you have medium-term sentiment that could be weeks, months. And then you have long-term sentiment, and that can be years and years and years. So Suncorp probably only went down on that day because there was a little bit of short-term negative sentiment. It could have been just something very simple. It could be a news article in the AFR. It could be someone just needed to sell and they sold en masse on open, and that caused a little bit of panic in the market. It can happen, and that's why the share price dropped. So no idea why Suncorp share price dropped. And the other thing you have to know and understand is the share price of companies don't go up or down in a straight line. In fact, they have the characteristics of a wave going up and down, up and down. Anyway, and what's a company who's, well, Suncorp here, you actually see it going up and down in a wave-like action, but generally, overall, the share price has been increasing. So those uptrends or those up times in the wave are better than those down times. Yeah, that's Suncorp. By the way, I just had a look at this. So it did go down heavily the day after, but even the day they released results, share price did go down during trading. So we did see a really long one-day red candlestick, and typically those are bearish. So if we have a look at, say, the 5-minute chart for Suncorp, yeah, the share price actually did open higher on the 12th. In fact, it opened up 3.72%, and then the share price faltered after that. So there was a fair bit of selling on open on the 12th, and then again on open on the 13th. And that looks like it could have been capitulation almost, because that was near the low for Suncorp over the last few days. And pretty big volume came through as well. Anyway, so that's why Suncorp went down. Well, I don't know. No one knows. No one knows. No one, if someone says they know why Suncorp went down, they don't. No one knows. Josh James Dean says 100 times PE for a retailer, ? And maybe, are you insane? Emoji, something like that. So Temple & Webster, 100 PE for a retailer. A couple of things here I just want to mention. So Temple & Webster, I suppose it is a retailer, isn't it? It's an online retailer. Yeah, so it's a retailer. It's just online retail. And share price rallied even further on the Friday session. So 2 pretty big up days in a row. I'm just going to pay attention to, okay, yeah, we'll have a look at the financial statements. And this is important. So the first important thing here is how much did profit grow? Is it growing off a fairly low base? And when a company's profit is growing on a fairly low base, you might see some significant increases in profit from year to year. So for instance, in Temple & Webster's profit from last year to this year actually grew 118%. And if the company can keep on growing their profit at over 100% over the next few years, P ratio of 100 is looking really small, really tiny. Because just think about it. Say this company can grow their P or their profit, they can double their profit over the next 3 years. So P ratio just assuming share price of Temple & Webster does not move over the next few years. That means that the P ratio goes from 100 to 50 to 25. Well, it starts at 100, then goes to 50, then 25, and then 12. And so P ratio 12 seems fine, justifiable. In fact, probably really cheap for this type of company with this sort of growth. And the market does pay for growth. You could say the market does pay a premium for growth. Now, will the company grow their profit at 100% per year over the next few years? Probably not. But it happened in the past year. Profits went from like $4 million up to $9 million. So as profit does grow, it becomes harder and harder to double that profit. But Temple Webster did that. The other thing I'm going to mention here is their profit was like $9 million, something like that. But I always have a look at the balance sheet, profit loss statement, and the cash flow statement. Now, one thing I took away, one of the things I always look at when it comes to profit loss is just the gross margins. So I always want to see revenue growing, and it did grow for Temple Webster. And the other thing I want to see is gross margins. So gross margins did increase by, say, 22 million when revenue increased by 60 million. So typically you want to see gross margins increasing, percentage increasing, but it doesn't necessarily have to. It can remain steady, but we don't want to see gross margins or the gross margin, profit margin dropping. That's one thing we don't want to see. Now, when it comes to the balance sheet, this can be quite important. Actually, not the balance sheet. I'm talking about the cash flow statement. So when we come to the cash flow statement, historically, this is the first statement I look at. So a lot of times I look at the cash flow statement first, then go to the profit loss statement and then the balance sheet, or go from the cash flow statement to the balance sheet to the profit loss statement. I've always liked starting researching a company's results by knowing how much cash flow, operating cash flow and free cash flow the company did generate, and then try to decipher why that sort of cash flow is significantly different or above the underlying profit a company did produce. So Temple Webster had operating cash flow in this particular half year of $35 million. Now, there could be some seasonal issues here. Maybe in the second half year, Temple Webster is operating cash flow and free cash flow negative by a fairly large amount. So that's the sort of information I'd like to know. But they were operating cash flow positive by 34 million, and they were free cash flow positive by about 34.5 million. So all that money, all that cash flow fell to the, well, not all of it, most of it fell to the bottom line. The reason I said most of it fell to the bottom line is because they did have, lease liabilities. They also spent money on a share buyback. And that's about it. And some other costs, but not relevant here. So not a lot of spending, to be honest with you, in investing and financing activities. So a lot of this company's operating and free cash flow does fall to the bottom line in the past few years anyway. So pretty nice operating cash flow for Temple Webster, but I wouldn't just buy on that. Particular cash flow. Pretty nice. And the other thing to take note of this company is the market. It's almost $2 billion. Yes, Temple Webster is or has a markup of almost $2 billion. Whoops, I did that wrong. I put the T code as T and the epsilon, whatever you call it, W. Jeez. But this is what happens when you're tired. Okay, so the markup usually on the right-hand side here, markup is $2.15 billion. And remember, this company had profits in the half year of $9 million. So those who do focus on the P ratio of a company might be looking at this with they'll be just shaking their head going, I don't understand. I just don't understand what's happening. Why do people buy this? Sort of like what I'm thinking when, I see CBA shares go up. Why are people buying this? It's asymmetrical trade. You're not, or more than likely, you won't win. More than likely. I'm not saying it's definite, more than likely. S. So yes, Temple Webster has a P ratio of what's $9 million over 1.5 years. So we don't know the full year. I'd say it's like $18 million. So yeah, P ratio of over 100. James Dean is absolutely right. Sensei 6011 says, imagine getting in on Telix as in December 2018, 6 years and 3 months ago, when it was like 70 cents. So that means $120,000 parcel was purchased on that. If you purchase $120,000 parcel on that day, that parcel now, if you do not sell anything and take profits prematurely, would be worth $4.6 million now. And I can actually go through many of the bigger companies on the ASX with a similar story. Very similar story. Thank you, Kapow. James Dean. Pro Medicus is impressive. P ratio of 352.76. I'm not sure it can get much higher than this, but I'll be honest, I thought that at 150 and 200, 250, 300 now. It's at 352.76. It could go up more from here. I don't know, but a company with a high PE ratio doesn't necessarily mean it's impressive. However, there are probably some really crappy companies who have a high PE ratio, so those aren't other companies to get fixated on. But a good, I have no idea what I was going to say. Yeah, a good company, a great company, Pro Medicus, and at this point in time, you have to pay premium if you want to be a shareholder of this company. Thank you, Just James Dean. I'm pretty sure my mum loves your comment. Colleen Jefferson, what is the smallest investment you can make? Firstly, the smallest investment I've made, which includes trading, is a company called AFP Pharmaceuticals. I think it's called AFT. Yeah, AFT Pharmaceuticals, ticker code is AFP, illiquidly traded. And this is a lesson learned. Don't trade illiquidly traded companies. So I bought some shares in this company at $2.40. Something, no, it would have been $2.32. And in fact, no, it might have been lower than that. It might have been $2.22. Something like that. Anyway, and what happened was my bid was hit, but it wasn't completely hit. It was like maybe 30% of my buy order was hit. So I actually bought some shares because the share price for some reason collapsed on this day. But then the share price rallied quite hard. So I did not get a full allotment of my shares in this company. What's it called again? I forget. This company. AFP, that's it. AFT Pharmaceuticals. Ticker code is AFP. So I did not get my full allotment of shares in this company. And it totaled, I think it was $277. That's like, And that has, and still is, and forever will be, hopefully, the smallest amount of shares I have ever bought in terms of worth, like $277 or something like that. I sort of hope share price pulls back, but because the rest of my bid's still there. But I'm just been waiting. And again, the shares in this company are liquidly traded. You can see at times week go past without a single trade being made. We saw that back in late December. There was no trades between the 20th of December and the 7th of January. Now, in terms of what's the smallest investment you can make, isn't it like Wiser, not Wiser, what's the other one? Why there's Wiser and Raise, is it Raise? And I think the business model of Raise, here it is, invest with Raise, invest, save easy, invest big. Here we go. Discover the power of effortless investing with Raise. Automatically round up, invest your spare change. Start investing with as little as $5. So if, say, your son or daughter has chores to do and they get a stipend, an allowance, is that what it's called these days, an allowance of $5, they can just put all that money into investments. They can start learning investment at that particular age. Start investing with as little as $5. So I suppose that's your answer. $5. Maybe there's another platform out there that's even less than $5. Maybe there's a platform out there, $1 is all you need to start investing. Brett Fellin says, Treasury wines, poor brands with Wolf Blast and Yellow Blands. Now, I don't know anything. I'll be honest. I am completely wine. What's the word where you don't know anything about something? Ignorant. Wine ignorant. Ignoramus. I'm going to say that. I'm completely a wine ignorami. I know nothing about wine. I will taste some wine and taste the next wine and think they're absolutely identical. And I know that's that's an insane thing to say, particularly for those wine connoisseurs out there. I'm pretty sure there's some listening. But when I drink wine, they all taste the same. I'll be honest with you, they all taste the same. Well, the reds and the whites are a little bit different, but yeah, they all taste the same for me. Anyway, so I'm assuming these are poor brands because Rick Thillian says so. Okay, so Rick Dillon also provides some insight into IAG. Besides lower than expected dividend, a huge drop for new policies not hitting a higher single digit, only 6% as with Suncorp. No upgrade to full year results, perhaps due to unknown claims. Northern Queensland bushfires being a little cautious. Suncorp results yesterday up retreated, but today lost 5%. Oh, maybe Suncorp share price fell because of IAG. That's a definite possibility. There we go. So there's a lot of possibilities out there, and that is one. And Rick Dillon says it was a shocking reaction. There you go. Oh, thank you. Happy birthday, Michael's mum. By the way, she won't like that you misspelled my name. A becomes before E in Michael. I actually had to say that today to one of the real estate agents. What is your name, Michael? Is that EAL? No, it's AEL. Anyway. Rick Dillon also asked, what's the plans on the money made of licensing deal? Will that affect future earnings? This is for Bravura. I actually don't know this. I don't know this because I'm only trading Bravura, and to be honest with you, I don't really care. I don't really care about that thing. If it's positive, their share price should go up. If it's negative, share price should drop back. So this is one of those companies that I'm not in it for the long term. I'm just in it for a good time. So it's like a marriage. You don't stay in the marriage just for the good times. You have to bear the bad times as well. That's like holding shares in a company forever. You have to hold them through the bad times. I'm treating Bravura as an affair. Maybe not an affair. That's as a short-term fling. Maybe not a short-term fling. Well, hopefully, this is how I can do it. I currently am treating Bravura Solutions as a short-term fling, but there's some potential there that it could last a little bit longer than a one-night stand. And I'm hoping it does. Who knows? Maybe Bravura and I can get married in the future. Well, not literally, but you know what I mean. Maybe Bravura will become a high-quality company, and then I will keep on holding Bravura shares through the bad times. Anyway, so I have no idea what they're going to do with the money, and it seems like they're trying to give it back to the shareholders, doesn't it? I would prefer, and if it was my company, I would trust myself that I'm the better capital allocator than shareholders. And that is why Berkshire Hathaway doesn't give dividends back to the shareholders, because Warren Buffett says, I'm pretty sure he has said this numerous times, I am better than you. He doesn't say it like that, but he probably should. I am he is a better allocator than shareholders. He can create more wealth for shareholders if he keeps their money and just keeps on reinvesting. Anyway, so that's what I would prefer Bravura to do, but they've made a decision to give some money back to shareholders, and maybe they might invest the rest. Maybe they might invest into R&D, or who knows, maybe an acquisition. Rick Dillon says, movie you would have enjoyed, the original Saw. I've seen that. Yep, I've seen that. Was lucky to be one of the first to see private media 6 months before release upstairs at Hoyt Cinema in private cinema. I used to go to the movie theatre every single week. This was for about 5 or 6 years. In the United States, the movies come out on a Friday. They used to anyway. In Australia, they came out on a Thursday. Maybe they still do. So if I would always be at the cinema on a Friday. And thankfully, when I was a student, very few of my classes fell on a Friday. So I can do whatever I want. And I will admit that sometimes I'll buy a ticket for one movie and then sneak into another movie because, I was a student and I was very poor. Anyway, so that's what I used to do. See a movie maybe 2 movies every single week at the movie theater. I love the experience. The other thing is, on a Friday before, about 4 p.m. or whatever, there wouldn't be many people. And I love, not empty theaters, but I love minimalist theaters where there's not many people there. Anyway, now the reason I brought that up is I have not been to a movie theater for about 6 years. For about 6 years. Fun enough, I have been to a movie theatre more times overseas in the past 8 years than I've been to movie theatres in Australia. In fact, I would say over the past 10 years, I've been to more movie theaters overseas than I've been to movie theaters in Australia. For some reason, I just don't go, I don't know. I'm not sure what it is. I just don't see the fun in it anymore. But when I'm overseas, it's just a little bit more exciting going to the movie. I don't know why. It's weird. Happynow says, thanks for another video wrap up and clarifying some things. Really glad Bioxen got in there after today's events on its stock price, and you said some things on it. Just a small thing aroused my thoughts. CBA's information, without doxing myself, I speak to a fair few different people in walks of life. I have to yet to honestly hear anyone go, wow, I feel good and have more discretionary spending and feel good about the economy. I I haven't heard anyone say anything like that either. I'm wondering if the whole reason our economy is doing okay when everyone doesn't think it's doing okay is simply because we haven't seen really good wage growth. We haven't seen wage growth keep up with inflation because real wages are going backwards. And we haven't really seen in unemployment go rampant. And I think if unemployment went rampantly up, things would be completely different than the way they are now, particularly the way politicians deal with it and the Reserve Bank deals with it. And I think the reason why we're not seeing unemployment ramp up is because of the problem of there's not enough people for the work out there. So historically, it's been the problem of hasn't been enough jobs for all the people. We're still seeing politicians in America say, well, we need to do this to bring jobs to America. We need to do this, more jobs, more jobs. And then at the same time, they're deporting people. And that's going to lead to a problem. There won't be enough people to do all the jobs. Hence why automation is vitally important. People just aren't having enough babies. And for the first time in history, the amount of people under the age of 18 in the United States is dropping. It has always risen until recently. Now it's dropping. Birth rates all around the world are dropping, maybe bar Africa. So moving forward, the problem is there won't be enough people for all the jobs. Hence, automation needs to be, it needs to be, that's why automation and AI is really important. So I've been thinking about this a lot. That's the saving grace we have had is we saw a lot of baby boomers retire. That's the other thing. So a lot of baby boomers have been retiring, and there hasn't been enough of the younger generations taking their place. So more retirements than people entering the workforce. And the only way to balance that is to bring in immigration. So most Western countries are facing that right now. And I think that's been what saved us. We haven't seen unemployment just go crazy. And that makes us feel a little bit better, I suppose. So you always bring a really good insight. Happynow. Okay, so Marty Scott. Hey, Kneppy, are you able to explain power options and what should I do? It has appeared as another share, PAROA, in my portfolio with a different share price. Thanks so much. Okay, so this is a surprise to me. I had no idea I was going to get some power options because of loyalty. I'm not a loyal person. So I've only had options once in my life, and that was Findy. And I received these options many, many years ago because of capital raising. I participated in the capital raising, and I think the only reason I participated in the capital raising was to get some options. I just wanted to get some options. I exercised those options at 90 cents. It was a little bit, what's the word? It was a touch and go situation because the share price was like $1 and then it pulled back to below 90 cents a few days before we had to exercise the options. And then I think the few days before the share price rallied above 90 cents. And then I exercised the options and the share price just went bananas. So hopefully that's the same thing. Same thing will happen to Paradigm. So do you know how options work? Here we go. Is this it? Option expiring 11th of February 2026. So you have 1 year. It's only 1 year. I would have preferred a few more years. Okay, so what price? What price were these options? What's the exercise price? I forget. It was like, I have a feeling it was like 65 cents. something like that. If it's 65 cents, I'm shocked they don't have it here. Maybe they do have it here somewhere. Info, where is there any sort of info there? Anyway, I'm just going to say there's six. In fact, you could almost tell. So if Paradigm share price is like 50 cents or 51 cents, they're probably 65 cents. Yeah, 51 cents. So about 65 cents. So if you go back to this, so right now, if you want to get some options, you have to pay 14.5 cents because the difference between the share price and the exercise of the options is about 14 cents. So there has to be, a bit of a price. So if you really think the share price of Paradigm will get well above 65 cents, you'll buy options. That is an option for you. Oh, I should have said that. That is a strategy you could do if you're confident the share price will get well above the option price. Anyway, so what happens now is, say towards sometime in 2026, say January 2026, shares price of Paradigm is $1.20. No, we'll say $1.30, and you have all these options. So what you're going to do is you exercise those options to buy Paradigm at 65 cents. And then you could immediately sell those at $1.30, make double your money. So you definitely want to exercise your options if the share price is above the exercise price. If the share price is below the exercise price, there's no point exercising or exercising the options because you can buy them on the market for a lower share price anyway. So you can buy them at 52 cents instead of 65 cents. So there's no point. So those options will expire. Now, the other question is, how do you exercise your options? Well, I had to notify Net Wealth, so my options were through them, and they actually sent me a message saying you need to have informed us within a week. So before a week had, not within a week, I had to inform them a week before the options were due to be exercised. So I did it the day before, but they did exercise the options for me. And I got those shares in my account a few days later, and that is options. And I've only ever held two options, Findy and now Paradigm. And Paradigm was a bit of a surprise. So hopefully I've answered your questions. Oh, by the way, you can sell your options if you want. You can sell the options. You can definitely sell your options if you really, really want to. Yeah. So hopefully I've helped you with that. Okay, that's what I'm going to do because 42 minutes have gone past. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.